Hai, Assalamualaikum warahmatullahi ta'ala wabarakatuh. My name is Nur Atikah binti Abdullah. I'm from KBA 2495A. In this video, I would like to present about the FinTech initiative that undertook in the Islamic financial system. FinTech is the word that refers to the financial technology. It is an emerging industry that uses the technology to improve the activities in the finance. FinTech also is used to describe the new technology that seeks to improve and automate the delivery and the use of the financial services. The FinTech also refers to the software and other modern technology that used by the business and provide the automated and improve the financial services. Through the FinTech, the fast and the innovative progress such as the mobile payment can change the way we manage our finance. Currently, the FinTech has set up a variety of the financial activities such as money transfer, deposit a check with our smartphone, by passing a bank branch to apply for a credit, raising money for a business startup, or managing our investment. Generally, it is without the assistance of a person. 82% of the financial services company plan to increase the FinTech partnership in the 2022, and for good reason there. FinTech is helping the banks and the credit unions to launch their digital transformation while reaching their goals. Initially, FinTech was said to be disruptive as it would change the conventional banking landscape, but for the financial institution, the reduction in costs and the business time make the banking more efficient and faster. And in addition, FinTech is also simplified and speed up the customer transaction at a lower cost. This is because now banking business and transaction can be done anywhere and anytime. Equity crowdfunding (ECF) is the one of the example of FinTech. The crowdfunding platforms such as Kickstarter, GoFundMe, and Patreon are the result of the development in the FinTech. Another growing area of FinTech, or another example of the FinTech, is the peer-to-peer or P2P lending, where the online platform can help to match the borrowers with the lenders and bypassing the banks. The peer-to-peer or P2P is a business model that encompasses a wide range of the products and services. The effect of the FinTech in Malaysia is that it can hold the wide potential benefits to all the business. Through the FinTech solution, it can significantly assist the small business by providing them with the better cash flow, improve the working capital management, and more stable or secure funding. For example, the Alibaba monitors and evaluates online transactions to identify the commercial opportunities and then offer the loans to the small business through the Alipay system. Next, the effect is that through to the financing and the access to the capital, the FinTech can help all the business through improved payment system, customer relationship management, and invoicing and collection. FinTech also is not only the ability to match the investor, but the effect is also can match the lenders and borrowers by providing a more level playing field that allow retail investor to have the greater participation in the market. The other effect of the FinTech is that through the FinTech solution intermediaries, it can help bring the additional liquidity to the market. Kuwait Finance House and Abu Dhabi Islamic Bank is the international Islamic financial institutions that has taken some initiative in the FinTech involvement. The Kuwait Finance House invests strongly in the banking innovation and the latest technology while cooperating with FinTech companies to meet the growth customers and industry needs. According to the Chief Executive Officer of the Kuwait Finance House, Al-Nahid, explained that the banks are developing a highly planning model to be better prepared for any potential future risks by using new emerging technologies and also that rely on the artificial intelligence and data analysis to meet the growing expectation of the customers. Then, the Al-Nahid also add that The innovation which is based on the new digital financial technology, which is FinTech, would change the business model of the banks, while bank would achieve the operational excellence through adopting the best practice and meeting the requirements of the relevant regulatory authorities. The Group Chief Executive Officer of the KFH also added the initiative that with the increase the reliance on the modern technologies, the banks have taken a greater role in fighting financial crimes and protecting user data and financial infrastructure. Abu Dhabi Islamic Bank is a leading of the financial institution that has collaborated with the Dubai International Finance Center, FinTech Hajj for the 4th consecutive year to be host a virtual speed meeting association for some of the world's most promising and innovative fintech company, with the concept including Islamic fintech, RegTech, payment and fraud risk. The startup may continue to collaborate with the Abu Dhabi Islamic Bank to create the impactful solution that can complement the bank's evolving digital offering to enhance the customer experience. Abu Dhabi Islamic Bank is an active supporter of the DIFC FinTech Hive, a first of its kind accelerator launched by the DIFC to drive the development and growth of the fintech ecosystem in the United Arab Emirates. So, in April 2017, the Dubai International Finance Center has announced its initiative to accelerate the growth of the financial technology in the region. According to the FinTech Middle East, the DIFC FinTech Hive has played a significant role in the emerging financial technology market in the United Arab Emirates. Bank Islam Malaysia Berhad, Maybank Islamic and Zurich Takaful are among of the Islamic financial institutions in Malaysia that has taken some initiative in the fintech involvement. BIMB has teamed up with the fintech firm in digital banking drive to offer the customers the convenience of doing financial transaction through the mobile remittance and e-wallet platform provided by the two financial technology firms. The Bank Islam has linked the Memorandum of Understanding with the Beripay Sindra Berhad and the Kibelpay Sindra Berhad. The Beripay with the aim to provide end-to-end foreign worker onboarding for the plantations, peer-to-peer fund transfer, as well as cross-border payment for the BIMB's customers. Bank Islam is teamed up with the Kibelpay to empower the cashless communities, especially in the education sector, and support the harsh growth in the payment for the e-commerce industry. Other than that, BIMB also launched Tweet Now service to ensure the convenience in the mobile banking. Next, the other IFI like Maybank Islamic has unveiled its fintech sandbox to offer a free of charge to help developers throughout the region. The sandbox offers the bank APIs banking data analysis and stimulation and development tools to create the new online and mobile application. Maybank also has brought their facial and voice recognition verification for customers accessing their account by using the Maybank 2U application. The other fintech initiative that taken by the Maybank Islamic is the MAE by Maybank 2U mobile application that was launched to help the Malaysians take charge of their everyday money matters beyond their regular banking needs. As for the Takaful service provider, Zurich Takaful, the initiative taken in the fintech is the agreement with the one of the fintech company in Malaysia, which is the so-called FinTech. It is as a part of its ongoing efforts to offer the holistic and to ensure a compliant solution to its customers. The Pay Halal is an online payment system that was developed to meet the need for the Sharia-compliant payment transaction solution for the users who seek the goods and services that according to the Halal and Thayyiban standard. The Pay Halal system utilizes the Islamic trust or deposit accounts in its payment process. Therefore, it ensuring the money will remain untainted by gharar and riba. The emergence of the fintech startup is changing the competitive landscape in the financial services, forcing the traditional institution to rethink the way they do the business. As the data breaches become prevalent and privacy concerns intensify, regulatory and compliance requirements become more restrictive as a result. This and other banking industry challenges can be resolved by the very technology that caused this disruption. But the transition from the legacy system to innovative solution has not always been an easy one. Next, the artificial intelligence that monitor the wearer's health to smarter thermostat that enable us to adjust the heating setting from the internet connected device. Technology has become ingrained in our culture, and this extends to the banking industry. In the digital world, there is no room for the manual process and system. Next, the other challenges is the regulatory compliance has become one of the most significant banking industry challenge as a direct result of the dramatic increase in the regulatory fees relative to the earning and credit losses since the 2008 the financial crisis. So, when faced with the severe consequence for non-compliance, banks have incurred additional costs and risks without a proportionate enhancement to risk mitigation in order to stay up to date on the latest regulatory changes and to implement the control necessary to satisfy those requirements. During the last few years, we experienced the emergence of the groundbreaking technologies in the field of the delivering financial products that might have seemed something illusory a decade ago. The expert foresight 2020 to bring a tremendous change in the future of the fintech industry. There are a few trends in the fintech banking that are going to disrupt the industry and drive the immense growth. First is the slowly digital banking. The age of totally digital banking is approaching. The majority of existing banking already offer the global payments and the transfer virtually, and those who do not yet will join the trend. Next is the going to the blockchain. In 2019, the blockchain technology became a widely discussed. Its embodiment into the financial services was relatively slow compared to other peers. The future of fintech in the 2020 is intimately tied to the blockchain technology, and the main reason are transparency and trust its guarantees, significantly decreasing the time needed for the transaction and improving the cash flow. Next is the AI and robotic are also one of the future of the fintech. The technologies have conducted by the National Business Research Institute and narrative science that say that 32% of the providers have already been using the artificial intelligence technologies like the voice recognition, predictive analysis, logical reasoning, and others. Such statistics are predicted to increase in 2022 and beyond, encouraging more investment in robots and AI solutions. We can conclude that the fintech is the result of the technological advance that apply to facilitate the financial and the banking affairs. However, the level of the consumers' awareness in Malaysia is still low in regard to the fintech, as the fintech market in Malaysia is only dominated by the fintech application for payment and visual wallet. Meanwhile, there are many other fintech service applications in the market that can help facilitate the daily business. For example, like the wealth management, investment services, loan or financing services, remittance, Islamic, FinTech, and others. The fintech revolution has had a positive impact on the country's job and the financial sector in terms of the opening firm and finding new talent in the fast-growing industry. Last but not least, I think that if we manage well the fintech, the fintech as what we can see, it can provide the benefits to the many parties.